Here's the Deal is brought to you by VEBS, Veteran Essential Business Services. We are your business air support. We have your six. You served your country faithfully. Now it's time to blaze your own path. Here's the Deal is a show for veterans, by veterans, to discuss real-world issues on how to start and run your own business. It's a cross between Dave Ramsey, Maria Bartiromo, and Joe Rogan. This is not academia. It's the truth. Here's the deal. Here's the Deal is proud to present our very first sponsor. It's B&G Chicago Catering. If you're in the mood for fresh, authentic Chicago-style favorites, check out B&G Chicago Catering. Founded by two Marine vets, and no, there's no crayon flavors involved here. B&G Chicago Catering is professional mobile food cart service, well-suited for large crowds and intimate gatherings. Currently serving the Metro Phoenix and Metro Tucson areas. B&G Chicago Catering will drive up to your next event, business storefront, or private party. Chicago classics like Chicago dogs, my personal favorite is the Italian beef, bratwurst, Polish sausage. They got tamales and more. All their food is made to order, hot and fresh, using only Vienna products. B&G Chicago Catering comes fully equipped and takes care of all the cleanup. So if you're looking for a way to give back to your employees and all the efforts they've been putting forth this year, need a last-minute option for a small, intimate birthday party, need to spotlight your storefront reopening, which hopefully they all get there soon, check out B&G Chicago Catering. You can find them at www.bgchicagocatering.com. You can follow on Instagram at BG Chicago Catering 520. Give them a call at 520-262-7596. Hey everybody, what's going on? This is Chris Flowers, your host of Here's the Deal, and this is going to be the third week show of January 2021. Hopefully the year is going well for you so far. I'm going to have Doug Caldwell of Fairway Mortgage on the phone. He's a retired Air Force vet, and he's my mortgage guy. So I'm going to have him go over the do's and don'ts in mortgages, where it's, whether it's a new build or a refi or all the different tricks of the trade, the ins and the outs. Give you the real scoop there, so that way you guys can make informed and educated decisions. So I'm going to dial him up now. Let's get him on the phone.
Yeah, hold on one second, my man. Hold on, let me put in his headset here.
All right.
Charging it up.
Charging it up.
Perfect. Can you hear me?
Yeah, I can hear you fine, brother. How you doing?
Doing good, man. Doing good. We're live already?
We are live. We are live. This is like
Here's the deal.
Here's the deal.
Here's the deal.
That's right.
Yeah.
That's how we do it.
What's going on?
All right, Doug.
Doing well.
So I want you to tell everybody first, give everybody a little background. Again, Doug and I are funny because, okay, yeah, we're Air Force, and we're doing all this finance stuff. Like, I'm in business finance, he does mortgages, things like that. We went about this the wrong way. I mean, he was a medic in the Air Force. I was security specialist. I was a cop. Plus I was an FO in the Army, whatever. So give everybody a little background on you, Doug. Just kind of a little bit more about you, about your career and stuff like that, and how you got into mortgages, and then we'll start talking about the ins and outs and the do's and the don'ts.
Sure. So I served in the military for 20 years. Air Force retired veteran. I was a medic for 20 years. The last 9 years of my career, I was an independent duty medical technician. So I was in charge of treating and diagnosing active duty patients. So I guess the way people kind of describe it quickly would be like I was an enlisted physician assistant. Now, the downside about being an IDMT in the Air Force is, sure, I was licensed and I fell under the chief of staff of the hospital, and I was able to deploy and prescribe medications and do physical exams and everything. But when I got out of the military, when I was going to get out, that license doesn't transfer to the civilian side. And we all know in the military, there's certain jobs we do that don't transfer outside. And we do a lot over our scope of practice compared to what normal heads do on the civilian side.
Right.
So, I was kind of contemplating my future, and I was wondering what I was going to do. I had finished my associate's degree about 10 years in healthcare. And I was thinking about nursing, and I was thinking about other things. I know a lot of guys that went to be nurse practitioners or that went to be physician assistants after they got out. And I was like, man, what am I going to do? And the time had come, and I was pushing 20, and I hated being in right now. You know, I was like, at that time, I was like so burnt out. Things were changing in the military that I wasn't feeling. And so I was like, I gotta make a plan. So I finished my bachelor's degree. Actually, I finished 2 years of school in a year before I got out, and my bachelor's is in healthcare management. I was going through a separation at the time from my wife, and I was talking to a friend about selling my house, and he was a loan officer that I ended up working for the first year and a half. And I said to him, I said, hey, listen, you know, I'm going to sell my house. Can you help me? And so he set me up with a real estate agent. He actually helped me kind of prepare the house and sell it. And during that time frame, he said to me, what are you going to do when you get out? And I said, yeah, you know, my degree's in healthcare management. I'm going to go run a clinic or an ER somewhere. I don't want to do direct patient care anymore, but I'm going to go run a business somewhere, or, you know, run a clinic. And he goes, how much does that pay? I said, oh, it probably starts off at 60. And he goes, that's okay, money. How would you like to make $100,000 sitting by your pool? And I said, oh yeah, that sounds good. How do I do that? He goes, become a loan officer.
Right.
The dude made it sound like I'm never gonna work. I'm just gonna sit by the pool,
No, you sit
and
by
collect
the pool.
checks, my man.
Right.
I don't even have a pool right now, man. But
basically, he was an Army recruiter.
He was an Army recruiter, yeah, man. So how would you like your car paid for in a Beamer? What? Yeah, all those guys in the dorm. I'm sure they all got Beamers, but they can't afford to put gas in them.
No shit.
But so I got into lending, you know, and it was great. I worked for a gentleman named Scott for a year and a half. I learned a lot about the business. I learned so much that I learned I can make more money outside of a team, unfortunately. And then Scott and I had a bit of a breakup too, and I went out on my own. So I've been out on my own now for over a year and a half. So I've been doing lending actually 3 years this month. It's been great. Last year was fantastic, even with COVID. I mean, it was a crazy year for mortgages, and I love it, man. And I do the same thing now. I mean, when I was in the military, not only was I in charge of people, I was in charge of a lot of people, but I was in charge of patients, and I was treating and diagnosing patients. I do the same thing now. I treat and diagnose people's financial situations, their credit histories, you know, and I get them into a position where they can buy a home, you know, and that's really the end game is making sure that they buy a home, you know, not because I'm going to get paid commission because I'm 100% commission, but because I love it when people buy a home. And I'd say the majority of my business is referred to me. You know, I do have real estate agent partners that I work with, and we co-brand, you know, ads and websites and things, but the majority of my business is people like you, Chris, referring people over to me, are you know, past clients, are refinancing those past clients. You know, I've helped several families, like help the dad, help the mom, help the cousin, help the brother. You know, it's just because they get good service, and I think that's the most important thing for me.
Yeah, I had Laura on a couple weeks ago, so of course, you know, that's our partner. Not only is she our partner, I know you guys partner up quite a bit because she does the Homes for Heroes and you do the lending, but then we all do the newcomer orientation over at Luke Air Force Base. So like I said, we're doing a lot of things, not only, you know, for our profession, but we're doing a lot of things to serve the community because we have a different aspect too. We have to come with a different angle than a lot of other people do. So okay, so you got into lending. Yeah, mortgages are like it's such a weird bird. I like business lending better. It seems to be a little more stable.
Yeah.
You know, my rates don't change like by the hour or anything. So, you know,
by
things
the
like,
second.
really, no joke. So, okay, there's a lot of, let's say, give us a quick rundown of, okay, there's so many new builds out there, and like, oh yeah, we got our preferred lender here, and we'll give you all these discounts and this, that, and the other, and this. And you know, I mean, is that really like the best deal to go for? Or I mean, they're going to get the money somewhere? They're putting that. They're. I mean, like I said, there's no free lunch. Okay, there's no free stimulus checks. We're going to pay for this shit sooner or later. So there's no.
Let me carefully talk and answer that.
Yeah.
You know, sure, and let me tell you this though. New builds are fantastic, and new build lenders do a good job. New build communities do a good job. Pretty much an only option of a lot of people right now, because we're about a third of the normal inventory, in this marketplace. Last year there was 3 times the houses on the market, and depending what your price point is, if you're like 250 and under, I mean, you might not have anything to buy, because you're going to have so many cash buyers and other people overbidding on properties that new builds may be the only way to go. Now, if you're a 750 to a $1 million purchaser, you probably don't have much competition in the market. There's not a ton of those out there. But with new builds, they're fantastic. I mean, you're the first owner. You get a 10-year structural warranty on most of these places. You get a 1 to 3 year, inside the walls, wall to wall, kind of every appliance, every crack, anything that shifts for 3 years.
But
fix.
I'm talking about the lenders.
So that's fantastic.
I'm talking about the lender.
Yeah, no, I know. I'm going that way. So, there's a bunch of positives with new builds. And then the thing is, if you ever go to a new build as a client, and I always tell them this, bring a real estate agent with you. Because if you walk into that new build office without your own real estate agent, and by the way, the builder pays the real estate agent, not you. You don't pay your agent a dime. The seller always pays the real estate agent. But if you walk in without a real estate agent, you're going to be represented by the builder. And if the builder they'll say, oh, yeah, we'll represent you. We'd love to. Because they want to have the control of everything, every aspect. They're going to tell you, hey, you have to use our title or else you'll pay a fee. You'll have to use our insurance company or else, something. You'll have to use our lenders or else something. In reality, in a normal marketplace, if a real estate agent was to tell you, you have to use somebody, or if I was to tell you, you have to use this guy for insurance, that's called steering, and it's against the law. Now, when you're a builder and you're selling, or if you're a seller of a house, you're allowed to tell people, hey, use our guy and we'll give you this or that. Unfortunately, it's just the nature of the beast. Is it the best option? I don't know. There's a lot of people that say, and it depends on the lender too, and the build too. Every lender's different. But there's a lot of lenders out there that, when they're given something, like a lead from like a new build, and if you have credit challenges or if you have some kind of things to overcome, they may not work hard on you because they have 100 other people just given to them, dropped in their lap. And they might only be available to you Monday through Friday, 7 to 4. I don't know. It's different per person. I'm not going to speak on behalf of every lender or of every build. But there may be some situations, at least the stories I've heard, of people having horror stories that, hey, I can't get through to anybody. Just like going to a big box bank, If you go to Bank of America to get your loan, you might not talk to anybody after 5 o'clock on a Friday. And you might need answers at 6 o'clock on a Saturday. I was actually helping a girl out the other day. She's moving here from out of state. She's buying a new build, and her real estate agent called me and said, hey, I got an emergency. This person just got denied by the builder. They talked to another lender, and they're not calling her back. I said, yeah, okay, well, it's New Year's Eve. Let me give her a call. So I gave her a call on New Year's Eve, talked to her, and then I worked on her loan very hard on New Year's Day. I spent 8 hours trying to solve this problem. And there was issues with her credit and issues with her debt to income, and I solved it. And I said, okay, cool. Yeah, you can go ahead and proceed with the new build. I'll send over a pre-qualification to the builder. And the agent called the builder's representative and said, hey, our lender figured out they're doing this, this, and this instead. And she told the builder's lender, and now the person's back with the builder's lender and not using me. I solved
up.
it. Spent 8 hours of my first of the year and figuring out how to do this lady's home loan and solving her dire situation. For what? For the no loyalty, my man. No loyalty. What's the builder giving her?
Wow.
$4,500. What am I giving her to help her close?
The loan.
$4,300.
You got it done when nobody else will call her back.
Yeah. There's a lot of builders that'll offer incentives and they'll steer you and they'll say you have to use our guy, else we're not going to give you this. And unfortunately, that happens. There's a couple builders out there that don't steer. And they don't care who you use. I think, who was it? I can't think of the builders' names right now, but there's a few builders out there that are like that, and they do well. D.R. Horton's one of them that doesn't care who you use. They don't offer incentive if you use their lender or not, because they know right now there's no reason to give incentive because you have no other options. There's nothing else out there but new build. So, right. So there are some builders out there that are very easy to work with as outside lenders. But you got to think about the preferred lenders in the communities as well. I mean, their companies pay a premium for them to be part of that group of preferred lenders. Like they can pay up to like $15,000 a month just to have their name on that list. And so of course they want to try to keep that business in house to please that person paying them money to be on that list. And if I was on that list, I wouldn't complain about them offering incentive to use me either, right? But I've helped a lot of people buy new builds as well, and I tell them, I say, you know what, this is what the builder's going to give you. I said, if I help you out moving forward, if I can solve your issues, I hope you stay loyal to me. And I've had a few stay loyal and a few not. And unfortunately, in sales, that's the nature of the beast. And when every one sale falls through, another one pops in. That's just how it's going to be. And you got to be positive. And in the end game is, hey, this person's happy in a new home, and hopefully they remember the good service I gave them. And I had a person leave me for a builder's lender once and call me for the refinance. It happens, and you just got to stay positive and stay, hey, well, congratulations. I understand your decision. Thank you for giving me your trust and time. And I hope that if you ever have a friend or family that's not in the situation, you send them my way, and hopefully that helps. So, and don't get me wrong, I have cried sometimes.
I'm about to say, you couldn't just kind of say, I know where you're going to live, right? So you sure you want to? Oh, I'm sorry. That's my tactic. I'm sorry. My bad.
Do you know what a firing pin looks like? I do. You shouldn't test me. Yeah, I don't think we could threaten people.
Yeah, probably not get it. But
we're
veterans.
Anybody you want, as long as it's in person without recording.
That's right. Hey, we're veterans, man. So certain things are
But no, new builds are good. New build lenders are fantastic. New build communities are fantastic. I always tell people though, if you want a new build, look in the same neighborhood, because if you don't want to wait 6 months or longer, because right now they're taking longer at some places. Some places don't have supplies. Some places don't have appliances, manpower because of COVID, right? So if you don't want to wait, go look in the same neighborhood and find a house that's 1 to 2 years old. And I think I told this to you too, Chris. Go find a house that's 1 to 2 years old. You're already going to have the backyard put in. You're already going to have the mini blinds put in. You're already going to have all these things that don't come with that new build, and you'll get it out already fixed and already put together. It's not brand new, but it's pretty close. And all the little shifts and different things that have happened have already probably been fixed. Mm-hmm. And I think sometimes that 10-year warranty on the structure may continue past that. So definitely check with the community and everything else as you buy the home. But yeah, it's a crazy world, man.
That's the world we live in, brother. Went from one shit show to another. So
yeah, no doubt. Yeah.
All right, so now obviously I think the big thing is doing rate reductions, right? So if you're currently in a mortgage, so like what are like the parameters? Like if you're paying over X%, or I don't even know, like the rates could have went up 15 times today. I have no idea what's even going on in the world. So talk to us a little bit about that.
So it has to make sense to either VA or FHA. A lot of people are, if you're talking about like an interest rate reduction loan, just pure and simple, it's like no documents needed. Like I won't need your bank statements. I won't need your income docs. Interest rate reduction loan, like going VA or FHA. It's the simplest loan out there. It has to make sense to VA and FHA. It has to lower your rate by more than a half a point, or it has to change the terms of your loan. Like if you're on an adjustable rate mortgage, and now we're going to be putting you on a fixed rate mortgage. It has to make sense for the payment to decrease, or the situation to improve. So those are great. A lot of people that are in conventional home loans as well are doing refinances right now because rates are at an all-time low. I mean, it kind of creeped up on us a quarter of a point to half a point the past couple of days, but they're at an all-time low. So it's actually fantastic right now, time to refinance. So I'm also having a lot of people that did down payment assistance a couple of years ago. Down payment assistance interest rates a couple of years ago were like at a 6.5, and now they're refinancing to like a 2.75. And they have enough equity in their house where they can remove their mortgage insurance.
Is that PMI?
The rate? No.
No, is that when you say down payment assistance? I don't know.
Down payment assistance is like if a person doesn't have. So whenever you buy a house, you have to bring in money as a down payment. So if you're buying like a normal conventional home loan, which is Fannie Mae or Freddie Mac, you have to bring in $3,000 to 5%, mostly 3% if you're a first-time home buyer. And if you're buying an FHA home loan, a government home loan, you have to bring in 3.5% as a down payment. The state has two really good programs, Home in 5 and Home Plus, that offer down payment assistance programs. Well, they'll give you 3, 4, or 5% money to be used towards your down payment. Now, those gifts that the state are giving you, and I say gifts lightly, it is repayable if you move out before 3 years. But that money that the state gives you, it comes at a higher interest rate. Nowadays, the rates aren't extremely bad. You can get it under a 4, I think. But a couple of years ago, it was like at a 6.5 if you got a 5% gift from the state, or down payment assistance from the state. So I have some clients of mine that did down payment assistance a couple of years ago at a 6.5% interest rate. Now I'm lowering their interest rate down to under a 3% or right at a 3%, depending on the client, credit and other things that apply too. But rates are so low. I mean, it could save them hundreds of dollars a month if people refinance right now.
Okay, that's good information too. So, so if they're paying above what, say 4 right now, now's a good time to maybe take a look at doing rate reductions.
Absolutely. Anything over a 3.5, you can talk about it. Rates are down in the 2s, 2.75, 2.5s. I mean, it depends on the client too. And people get confused with that too. They say, oh, interest rates are at 2.75. Yeah, it's true, they are. And I got things in the mail the other day saying it's at a 2.25. Sure, that's true, it is. If you want to pay 2 points to get there, and if you want to, and if your credit's above a 720, so it's really dependent upon the person. And interest rates aren't like a generic rate for everybody gets it. It depends on your loan to value, so how much you owe your house and how much your loan is worth, how much your house is worth and how much your loan is valued at, what your credit is. If you have like above a 720, interest rates are typically at the lowest. And if you have over 15% equity in the house, interest rates are typically at the lowest. And if you have 50% equity, obviously they're going to be extremely low. Mm-hmm. But and then the person is also, we look at their debt to income ratio as well for some of these loans. If you don't make any money but you have perfect credit, I mean, that really doesn't help either. So it's specific for the person, so we want to make sure that they're able to repay the loan and that we can do the loan and that it makes sense for the bank that we sell it to. So.
Okay. So when you were talking about buying points, obviously you're paying money to get a lower rate.
Correct. Yeah. So there's a lot of people out there that think, like I get these things in the mail all the time. Since I'm the VA, your VA, you probably get them too, but hey, your interest rate is now worth 1.75 or with 2.25, call us, it's free.
Yeah. You know what I love? I love when it says, okay, this is the final notice. Like, please, God, I wish this was the final notice. I know it's not going to get 15 more, coming.
No doubt, man. I've actually built 2 houses out of that paper, but I get the mail. But no, yeah, so you get those things in the mail all the time. And first off, they say, hey, like with me, I'm with Fairway. They say, hey, Fairway Independent Mortgage, here's your new low rate. Or, hey, VA, the new VA benefit from the government. Look at this, And it's all BS, just trying to get you to open it and give them a call. And people can get down that far. I mean, you have to pay to get there, and people don't understand that. Now, the good thing with VA or other types of loans is that, is you can buy points and put them as part of the costs of doing the loan. But I usually break it down to somebody and say, okay, you have a $300,000 house. Your loan's going to be $300,000. It's going to cost you 2 points to get there, which is $6,000, because a point is just a percentage of the loan. So 1% is 1 point. So the $300,000 would be 1 point would be $3,000. So 2 points to get there, $6,000. It's going to lower your payment down $50 a month. If you take that $6,000 and divide it by $50, it's going to take you this amount of time to break even. Is it worth it? What's your plan? Are you going to stay in this house forever, or are you just going to, sell after 3 years? Because if you're going to sell in 3 years, you might not want to waste that $6,000 right now, to lower that payment down. So really working with a good loan officer can kind of break down those things for you. A lot of these lending companies that you're receiving junk in the mail from too, they're all online companies. And I got a thing for that too. So, mm-hmm. You ready for that? So online companies are fantastic. I mean, you can get an online loan if you want. Here's how that works though. And I'm sorry, I'm getting another call, so if you can hear beeping, that's me.
Mm-hmm.
Here's how that works. So I tell people like this. Now, there's other lenders in this town besides me, and you can go to them too. But you can also go to Walmart or you can go to Target. Which one do you want to go to, Chris?
I'm taking Target.
Target, right? You want to go to Target. You want to go somewhere where you know you're going to get a good product, you're going to get good service, not have a big hassle. It's not going to look ugly in there. You know you're going to get good service. Now, That's how it is coming to Fairway. You might pay a little bit extra on origination fees or something, or you might, it might be $100 more than the next guy, but you're going to get a good product. And Fairway's well known. It's a good name. We're the number one purchase lender in Maricopa County. So I mean, we do a great job. And when I tell you your loan's going to close on this date, it's going to close on this date. And when I tell you this is what the costs are going to be, it's what the costs are going to be. And if you need to call me and contact me, I'm available. Mm-hmm. It's like going to Target. I mean, everything's there for you, and there's always somebody on every aisle willing to help you.
Exactly.
Now, if you go to Walmart, you can get the same thing. It's going to cost a little bit less. Might be a little bit ugly. Might be a little bumpy. Might be rough going in and out of there. You might get mugged in the parking lot. Who knows, right?
Right.
But you'll still close. Or the third option is if you want that DVD player, and I'm aging myself with that. If you want that DVD player, the third option is you can call China and order it. Right? You can go online and order it directly from China. Now, here's the problem. It might show up 3 weeks late. It might not be exactly as advertised online. And you might not be able to talk to anybody the whole time when you have questions, worries, or concerns. That's kind of what it's like going to an online lender. These places, they're out in New York or wherever. There's one big one. I'm not going to say the name, but there's a big one out in New York, and they pay their they pay their loan officers like $8 an hour to do their job.
Wow.
I get paid commission.
Wow.
Yeah, I get paid commission. They pay these loan officers like $8 an hour. That's why there's no overhead. That's why there's no fees, no fee loan. We're going to give you the 1.75 at no cost, all this thing. And sure, that might be the best thing to do if you got 60 extra days to wait and you're not worried if it's going to be good or bad or ugly, But so there are some of those places that you can order directly from them online, or you can go directly to China too, like I said. But I like to tell people, hey, listen, if you want the best service, if you want to have the best answers, a guarantee, then you come to me, And so, and our company's big out here. Now, we got some heavy hitters out here in the valley. We got some great loan officers out here. We all do a good job. Fairway's big, man. I compete against myself and my team all the time. So
nice. Well, as I know, I feel extremely confident referring people to you. Like I said, I'm that guy where it's like I don't need to have 900 people. I got Doug. Okay, you want a mortgage? Go to Doug. I mean, that way I know I can sleep at night. Just knowing like, hey, I refer them over to Doug. Hey, they're solid. Okay, they're taken care of. So that's the part that I like about it, because I've seen him in action. I've heard him on the phone. I've done several things with him. Like I said, not only we're friends and we go do stuff, but at the same time, like I've seen him in the community doing his thing, and every word he just said he does on a daily basis without fail. So that's why I wanted you on the show. That's why I wanted you to talk about it, because like I said, I know if anybody's out there thinking about doing mortgages, I want them working with you. So
no, that's nice, man. I appreciate that.
Not a problem. So now, another thing I want to talk about, which is another kind of hot topic out here. When is it time maybe to possibly sell, or what about renting your current home and buying a new one, or so? So like what, the rental option, because people are looking to build their portfolios, and everybody thinks they want to be a property manager and hold a bunch of real estate till they find out what a shit show that could be. But yeah, so let's talk a little more about when's a good time to possibly look at renting your place out, or because a lot of people are looking to be that get into that gig.
Sure. Well, ask yourself this first, I guess, is do you mind if somebody that you're renting your place out to parks their Harley on your living room floor and ruins your carpet? If you mind, you probably shouldn't be a landlord, because crazy things will happen to your house. I knew a guy one time, a school teacher out here, and he had a rental property and he had a home. And man, this dude was like at his rental property every day, like looking out like his car windows. What's he doing? What's he doing to the house? You know? And it's like, man, quit stressing over your rental property, dude. He's got a lease, he's got a deposit, you know, just leave the guy alone, you know. But he could not be a landlord. This guy's stressed. He like knocked on the door and wanted to come walk through and say, what are you doing? Let me look at the place. Like a parent looking at a kid's bedroom, you know? It's like,
right.
Dude, this a legal obligation between you two. You're renting this place out. But don't get me wrong. The guy was from another country, and he smoked like in the house, and that sucks because smoke, man, getting cigarettes out of a house, that's hard to do. That smell. But and the guy really didn't take good care of the house, so it was a kind of a rough example. And I've had other people.
Well, here's an idea: don't rent to them.
Yeah, well, and you have a choice who you rent to. Absolutely. Here's another thing: is I know another guy that has multiple rental properties. And due to COVID, you can't really evict somebody right now, kind of a thing. There's some laws to that. I don't really know him 100%, but he's had a guy in his rental not paying rent since March, and the guy won't leave. You know, he had to get his lawyers involved like last month, and he probably should have done that before. But he's a really nice guy, and he kind of gave the guy a break. You know, he doesn't need the money, but still, it's a horrible situation. So, you know, so ask yourself if you're ready to face kind of some things. And if you do become a landlord and you want to rent out your place, find somebody on a fixed income or find a military person in the Valley. I mean, military people, we know they're going to pay their bills because, you know why? You go to their first sergeant and you know they make housing allowance and you kind of can figure out how much they're going to make. And you know, oh, you're an E6 where you make $1,700. The rent's now $1,700. No, I would never say do that. But seriously, though, I mean, there's a lot of good people you can rent to and definitely screen everybody you're renting to and try to make sure you get a good feel for them. And charge your pet deposit too. But you were asking if it's a good time to become a landlord. So do you know who Robert, I think it's Kiyosaki is?
Yeah, I've heard that. Yeah.
Chris? Yeah. So he wrote a book called Rich Dad Poor Dad.
Yep.
And he also wrote something called the Cash Flow Quadrant. So in the book, the Cash Flow Quadrant, he talks about the 4 ways to make income, right? And one of them was to work, be a W-2 employee, be a normal employee. The second was to own a business, and that's a fantastic way to make money. But the third best way to make money in the top right corner was of the quadrant was to be a business owner but have employees working for you. That way you can have your business operating, but you can also go out and get new business. The fourth way to make money in the United States, and the best way, is through investments in properties, owning homes. And so if you want to be, you know, not rich, but if you want to live, you know, a good life like other investors, then you become a real estate investor. I was talking to a guy the other day that owns 200 doors out here. He's a real estate agent helping one of my clients. And I said, oh my God, that's amazing. 200's a lot. I know other veterans in Colorado and other places that own just as many. So there are some pretty good people that we have. Greg Young, one of our real estate agent friends, he owns properties in Florida. But, you know, there's some good people out there that own a lot of properties. Yes, it's a good idea. Always 100% it's a good idea. Now, will you qualify? That's another question. And again, that's specific for the type of loan you're going to get and what type of loan you have, and if your debt to income ratio will kind of provide for it, and your credit and other things. So it's a whole risk analysis. Remember that thing they said, algebra, you'll never do it. Why are you going to learn it? I do algebra all the time when it comes to solving financial stuff and figuring out incomes and debts and things. Mm-hmm. And all the problem solving I do daily to see if someone can qualify for a specific thing. I do it all the time. So yes, it's a good idea. Yes, now is the time if you want to become a landlord. Now, also, it's the right time to sell. I mean, we have 1/3 the normal inventory on the market, depending on the price point, that we did a year ago. And equity in homes went up, I think, 10 to 12% year over year. According to the Case-Shiller report, it went up about 10 to 12% year over year in Phoenix. We're like the second, if not the first hottest growing market. I think Florida is pretty close to us. Certain parts of Massachusetts as well. But we are a very, very hot market. And so if you've already gained a lot of equity, if you're thinking about bailing on your property to cash out, why it's on the top of the market, it might be time. You know, I don't know what's going to happen in the market in the next couple of months, but I don't see it slowing down. Even the projections for equity is probably about 5 to 6% over the next year in our area. And that's probably a low projection. You might even see another 10% increase. So maybe holding on to it for a few more months might be a good idea too. But it's really up to you and your financial situation. If you're over your head in debt and you got, $60,000 in equity that you can take out and pay off your debt and kind of start fresh and help yourself out, it might not be a bad idea. But, you definitely want to make sure that your plan is thorough and that you know what your next step's going to be after you pay your debt, because a lot of people pay off their credit card debt and they run it right back up the next week. So,
right.
That's the downside about debt. Here's what I tell people with credit card debt. I tell them, I say, you know what? Credit card debt sucks. I said they make a lot of interest. You buy $60 pair of shoes and you pay $400 for it by the time you're done paying it off. Right? I see people like a Taco Bell buying their food on a credit card. It's sad that people have to do that and they're in that situation, but it's also irresponsible. And I grew up very poor, just like you. I've talked about that, and trust me, I've stolen more food than I'd like to remember, right? But
right.
Credit cards. Most Americans they live in this credit card world, and they run them up to 10 grand, and then all their paychecks that come in, they spend paying their monthly bills and their credit cards. And then once they pay their credit cards down, they go, man, I'm tired of spending all my money on my bills. I wish I had this new video game system, or I wish I had this new hat or concert tickets or whatever it is. And what do? They put it on their credit card because they feel like they want something new and they need something new. And so they run their credit cards back up. And then they spend the next year paying them down, and then they want something new. And then they feel bad they can't take their kids to Disneyland. So they put the whole $3,000 trip on those. And, and eventually you get yourself into this cycle of staying in debt and paying other people interest on your money. So, you know what, if you have a 401k out there, and instead of, spending all your monthly debt on that, take a loan out against yourself interest-free, and talk to your financial advisor about it, definitely. But take a loan out against yourself and pay off your credit card debt and stay out of it. Don't cancel the cards now, because if you cancel them, it can hurt your credit as well. But don't use it. Discipline yourself. Find some kind of discipline, which is difficult for a lot of people, So
see, now this just turned into, like I say at the beginning of the show, this is a mix between Dave Ramsey, Maria Bartiromo, and Joe Rogan. So now that we got through the Dave Ramsey portion of the
just like your dad.
My dad was an idiot. Hell no, he wouldn't tell me. He didn't have this much common sense. So you're the good dad. way to tell them they're a good dad.
And up next, we're going to have Gary V, who is also a great podcast. If you don't watch the Gary V podcast, he's pretty good, man. Have you ever watched Gary V?
No, I haven't just yet. I'm trying to get people to listen to my show, so thanks for advertising for somebody else. I appreciate that.
I'm just trying to piggyback off of the.
Dude, I'm messing with you, bro.
He's a horrible one. Don't listen.
Yeah, he sucks. Just listen to Chris, man.
He's down to earth and all that stuff. But you know what? People are going to appreciate that you suggested others.
That's right. Wait, Gary V. Just remember that. Actually, I'm going to look him up when we get
V.
on. Yeah.
VEE, Gary V. All one letter. But no, I mean the guy, man. I mean, gives a lot of great advice, and that's kind of what I'm doing right now, is giving more dadly advice than I'm not telling you how to do it, or so much. Definitely talk to a professional. I always tell people that too. They always say, should I pull this out of my 401k? I said, not a bad idea, but talk to your financial advisor. I don't want to be the guy that 100% directs them. And same with taxes. How much would small business owners, they make 200 grand and then they say, I made 200 grand last year. And you get their tax returns and you look at them you made 20,000. I can only give you a loan based off the income you claim as income, not the things you wrote off.
Right.
And smart business owners will write everything off. I mean, it happened with our president. But no, I mean, smart business owners will write everything off. And every business does it. Doesn't matter if you own a restaurant or if you own a corporation, you're trying to write off as much as possible. When you go to Burger King and they say, hey, do you want to donate 20 cents to this fund? And you go, oh, yeah, I guess I'll give my change to them. They take that donation and they use it as a write-off for themselves. Yeah, we donated $2 billion this year. Oh, you get to write that off now. So it's kind of funny, but yeah, so income's hard to qualify people for when they own self business owners. So I usually tell them, hey, listen, this is probably the amount of income you should claim on your taxes to qualify for the house you want. But talk to your accountant about that, So I don't want to tell them how to do their taxes.
Well, like I said, that's why, again, when I one of the earlier shows that I did, especially on the business lending side, like I said, you definitely got to have your banker involved, you got to have your CPA involved, and you got to have your attorney involved, because again, let me throw that carrot out there, since we're kind of going down this road, although this is supposed to be the personal financial show. When it comes to business lending, just because you can write it off doesn't mean you should, especially if you want a business loan later on down the road, because just like Doug said, if you can't show it on paper, black and white, that you can pay me back, I don't care if you drove up in a Mercedes SL 500, makes no difference to me, okay? If I don't see it on black and white tax returns that you can debt service my loan, I'm not giving you the loan. So it's plain and simple.
Right.
I did $10 billion in business. Well, shit runs through a goose. If you don't retain any of that cash, then guess what?
Right.
I don't care. So, but then again, that's what I said.
Well,
that's a different show.
Yeah. That's what led to the financial crash in 2008, right? Is because the you had a pulse, you could get a loan.
Right.
It's called you got a pulse loan, right? A pulse loan. And people would say, yeah, I made $200,000 this year. And they would print out like a tax transcript or tax, 1040 that they hadn't filed yet. And they'd go, oh, yeah, looks like it. And they would give them a home loan, right? And then they would have like $1 million house with a 10% second, and they'd be just up to their ass in debt, and then people couldn't repay it. And what happened?
Mm-hmm.
People started crashing, selling and just foreclosing and getting out of that whole situation. The banks got bailed out, and the people got screwed, right? So now, if they would have held their houses for 20 years, then they would have been okay now. I heard a story of a guy the other day. He had like $1 million house, couldn't afford it, and he just sold it, right? Because now it's worth $1.4 million, but he held on to it for a long time. But so that's the thing with income. There's a lot of people that say they make a certain amount of money. I have people tell me all the time how much they make. And then you get their bank statements, their W-2s, and their tax returns, and you get the real answer.
Mm-hmm.
And they don't. So you tell them, hey, I can't qualify you for that much. And they say, well, I'm going to go to another lender who can do it.
Go ahead. Go for it.
And eventually you may come across a lender who will kind of forge a document or do something, but it's not worth me and you sharing a 3x3 for 5 years.
No joke.
When one falls out, another one comes back.
No
right?
joke.
So yeah, income, man. Income's very important. You have to have the ATR, the availability to repay the loan. It's a new law thanks to the crash. So.
Okay, so again, this market, especially here in Arizona, Maricopa County, it's just ridiculous, right? Like just trying to they can't build houses fast enough out here. I mean, you should have heard the briefing I was at this morning with the West Valley Commercial Real Estate. But they had a land guy out there. Man, they got so many master communities coming up here. Man, they need some like 200,000 units or just something ridiculous. And that's like in the West Valley. Okay, so yeah. Oh my God, it's insane. So, so I guess the last piece of advice I guess you would give somebody in this particular market is, hey, should I sell, should I buy, or whatever? Again, what's a good rule that Doug lives by is say, hey, is this the time to sell, or is this the time to buy something new, or what do you because like I said, I know you give people the straight answer, so what is it you kind of like the rule you play by?
If you need the money, this is the time to sell because it's a hot market, and you'll probably get asking, or if not above asking. You may even get a cash offer for your home. I mean, you probably sell your house rather quickly right now. So it's definitely a great time to sell if that's your idea. Is it a good time to buy? People always say to me, hey, the market's going to crash. Rates are going to continue to get lower. I'm going to buy the same house in a year for a $300,000 house in a year for $200,000. I don't want to lose my ass in this market. That's bad advice. The market is not going anywhere. The house prices are going to continue to go up. This is not the crash. We actually verify people can repay loans. And there's nobody saying interest rates are going to get lower. The way it's looking actually with inflation, that the rates probably get higher. Are they going to get extremely high? No, maybe a half a point higher, but still, it's going to get a little bit higher moving forward. So, is it a good time to buy? Yes, it's a good time to buy because equity is going to continue, and rates are at an all-time low. If you were to wait last March, if you were looking at houses last January, you're looking at houses, a $300,000 house, and you waited because you thought the market was going to get worse. Rates improved since then, and you lost 10% or 10% equity. So you might be paying $330 for that same house now that you would have paid $300 for last year. So, and I think the equity is going to continue to increase in our market. We see it. The trends show it. There's statistical data for 30 years of birth rates that talk about, these people entering the housing market, and it's factual data. We could talk about it another time, another show, but the market's going to continue. People are coming into the market. Baby boomers are leaving the market. There's going to be a lot of sales and things like that. A lot of millennials joining us. It's a great time to buy. And also the statistics also show if you're a millennial, and you're probably going to live with your folks till you're in your 30s. If you're a millennial and you're married, there's like an 80% chance you'll buy a home. And if you're a millennial and you're married with one baby, or if you just have the baby and you're millennial, there's like a 95% chance you'll buy. So baby registries and marriages all went up over this quarantine via Google searches. So who knows? I think this market's going to be on fire. Don't price yourself out of it. But if you want to sell something, it's also a great time to sell. It's a good time to do both. And if you need help, call me or Laura. We can help you out. DougIsYourLender.com. And we can help you out, with your needs.
So lawyers are ambulance chasers, and mortgage loan officers are baby shower chasers. Is that what you're saying?
Quite possibly, yeah. Yeah. You need. Well,
hey, you just had a kid. You need to buy a house, man.
In COVID. Right. There's some things that happen in COVID. There's a lot of
babies
born. There's a lot of divorces. So I can help you out with both. And trust me, I help out divorcees and I help out brand new babies on my too. So, and I can deliver a baby too. I worked labor and delivery for 3 years.
See,
so
there you go. See, there you go.
Yeah.
That's awesome, man. Okay, Doug, give everybody the full boat contact info, how to reach you.
Yeah.
Give everybody the details.
So, yeah. Perfect. So Doug Caldwell. I'm with Fairway Independent Mortgage out of Chandler, Arizona. My phone number, it is a California number, 925-421-7280. The reason it's a California number is, as I said in the beginning, I am a retired Air Force veteran. I come from the Bay Area, and I moved out here, and I kept my phone number. A lot of people say that's a bad thing to do because I might be losing some business, but you know what? I think it's fantastic. I haven't had any downside to it. But 925-421-7280. You can also go to DougIsYourLender.com. Matter of fact, everybody listening, type that in right now, DougIsYourLender.com. Go to that. Look at the website. Tell me what you think. If you go to Facebook or to Instagram, I also have DougIsYourLender.com. And I was talking to a real estate agent yesterday, and I'm supposed to sign up for, let me look at my notes, a TikTok account. So I'll probably have one of those here too. So, but yeah, DougIsYourLender.com, 925-421-7280. If you search those in Instagram or on Facebook, that'll pop up with some of my videos and ads and other things that I've done too. So.
All right, that's awesome, man. Like I said, I just appreciate you coming on. Appreciate you, obviously. Well, I appreciate your service, of course.
Yes, sir.
As usual. Yeah. So just to close out the show, I just wanted to, as I always do, just wanted to say, first of all, I couldn't do any of this without the grace and mercy of the Lord Jesus Christ. So thank you, Lord, for blessing me with this opportunity to put on this podcast and have people like Doug on. Give our brothers and sisters of the DD214, the real deal on information. Of course, thank you to my family for supporting me in doing this podcast. I also want to thank the City of Surprise for all their support, as well as the Glendale Chamber of Commerce. They're really getting behind this thing too. Doug and I are part of the Glendale Chamber of Commerce, and we're on the Veteran Affairs Committee on that. And then also, thank you to all you guys that are out there listening and supporting the show. As I always say at the end of the show, stay focused, stay tuned, and stay motivated. And we're out.